Hi, I'm Aave, and this is The Coin Daily. Here are the headlines. A federal court clears a $71 million Ethereum transfer to Aave. The SEC delays prediction markets ETFs under continued regulatory review. Bitcoin holds above $80,000 as accumulation keeps building. In other news, Iran delivers a ceasefire response as Hormuz tensions begin to ease. We begin with this. A federal judge in Manhattan has authorized the transfer of about 30,766 Ethereum, worth roughly $71 million, from Arbitrum to a wallet controlled by Aave LLC. It marks a major procedural step in the recovery effort after the April 18th ETH exploit tied to Kelp DAO's liquid restaking protocol. Until now, those Ethereum funds had been locked by a restraining notice after creditors holding terrorism judgments against North Korea tried to seize them. The court decision modifies that freeze. Arbitrum's on-chain transfer can go ahead, and those who initiate, vote on, or execute the move are protected from being treated as if they violated the order. However, the court did not declare these assets completely free of dispute. Aave agreed to remain bound by the same restraining notice, so the terrorism creditors' claims follow the ETH into the new wallet. For users affected by the RSETH exploit, that means the assets can move into the recovery structure, but the legal fight is still active. Litigation over whether the funds can ultimately be claimed by creditors in the North Korea case has not been resolved, so even with the transfer approved, the ETH remains under a legal cloud. Now to SEC delays on prediction markets ETFs as the agency continues its regulatory review. The SEC has delayed the launch of 24 exchange-traded funds tied to prediction markets, putting new products from Bitwise, Roundhill, and Granite Shares on hold just as they were set to start trading. The latest action draws a clear line between standard spot crypto ETFs, which now trade after years of regulatory pushback, and a new frontier, event-based funds that aim to track outcomes like the 2028 US election, recession probabilities, and sector layoffs. Where a spot Bitcoin ETF simply holds Bitcoin, prediction market ETFs give exposure to contracts that pay out if a certain event happens. That difference matters for regulators. The central question is how these funds would operate within existing securities rules, because the underlying event markets raise a different set of questions around pricing, settlement, and market oversight. There's also a jurisdiction question in the background, since prediction markets can look closer to derivatives than the cash markets most ETFs use. For now, the SEC's message is procedural, not a signal of where it will ultimately land. Prediction market funds are getting a dedicated review, and there's no fast follow here just because spot crypto ETFs went ahead. Up next, Bitcoin holds above $80,000 as accumulation continues to build. Bitcoin's move above $80,000 this week is notable, but what matters more is what followed the breakout. Bitcoin was trading around $80,899 on May 10th, after reclaiming the 80,000 mark earlier in the week and staying above a zone traders had been treating as a ceiling. The key area traders are watching now is the band around 80,650. If buyers keep defending that zone, it would suggest former resistance is starting to act as support. So, is this level acting as true support or not? This candlestick chart presses through 80,000, then coils just above, with price repeatedly rebounding from the zone around 80,650. That sequence shows buyers stepping in each time the market retests support. That's the support flip traders care about. But what underpins this price action isn't just technicals, it's accumulation beneath the surface. Over the last 30 days, whales acquired about 140,000 Bitcoin, the strongest wave in over 2 years. Long-term holders, with Glassnode data cited by CoinDesk, have added more than 250,000 Bitcoin since March, while short-term holders have also started adding coins again. That buy-side support keeps the focus on whether the next move is a sustained leg higher. For now, 80,000 is more than just a psychological milestone. It's an active battleground for support. Now we turn to Iran and its ceasefire response, with Hormuz tensions beginning to ease. Iran has officially responded to a US ceasefire proposal through Pakistan, putting the Strait of Hormuz back at the center of the market story. That narrow waterway handles roughly a fifth of the world's traded oil and gas in normal conditions. When tensions rise and Hormuz is threatened, oil prices can react quickly as markets price in tighter supply, higher shipping costs, and wider inflation pressure. That is why this matters beyond energy. If tensions ease and shipping flows become more secure, it can reduce one of the clearest geopolitical inputs into crude prices and remove a source of macro stress feeding into broader risk sentiment. That does not automatically lift every risk asset, and this is not a final agreement. Iran's response is part of an ongoing de-escalation effort, so headline risk is still alive. For markets, the key takeaway is that moves here are being driven by the broader global risk backdrop, with Hormuz still acting as the central pressure point. Aave's court-cleared $71 million Ethereum transfer is the hinge to watch for DeFi recovery next, and that's where we leave it tonight from the Coin Daily. How does Iran's ceasefire response and easing Hormuz tensions change the market backdrop crypto is trading in right now? Hit subscribe and tap the bell for daily coverage. Shorts through the day, the full show every evening.